The first question, Thierry, is how did it all started? I mean, Finance Watch has only 2 years. It's quite a recent organization. You were there from the very beginning. Can you tell us a little bit, how come, what's your background, and how come you one day created Finance Watch?
Yes, thank you, Mathieu, and good afternoon to everybody. Good question, because Finance Watch has been operating now for exactly 2 years, since we were created, formally speaking, at the end of June 2011. But Finance Watch really started a year before that, in June 2010. In June 2010, there was a call from 22 members of the European Parliament who said that they had in their office every day the financial lobby pleading for their private interests. And those 22 members of the European Parliament said, we don't have a problem with that, we can listen to them, but in a normal game of checks and balances that's inherent to democracy, we want to hear the other side of the story. We need to hear the counter arguments if we legislators want to be able to come up with financial regulation that makes sense. So that was.
Do you mean that before that there was no other organization at EU level that was doing the job?
There was no organization doing it systematically with as broad a topic, a range of topics as Finance Watch does. There was, of course, a number of organizations, covering a number of topics, and there were some very good ones, but there was no systematic coverage of all topics, financial topics. So that was really, the start of Finance Watch. And what was really interesting is that those 22 members of the Parliament launched that call. One thing was that the call came from 5 out of the 7 political groups that are represented in the European Parliament. So there was a completely transpartisan call, which is very important because we'll probably discuss, general, public interest and private interest. But it's very important to understand that in a democracy, public interest is not a conception of being from the right, from the left, from the center, from the Greens, whatever. It's a question of democracy. That's what democracy is about, public interest. And the other thing is that the initial 22 members of the Parliament were very quickly joined by close to 200 elected officials throughout Europe who signed the call and effectively said the same thing. And obviously, in a democracy, when you have 200 elected officials saying something, it gives a momentum to a movement, I would say.
Yeah, that's very interesting. Maybe later on we can come back to, Finance Watch organization and the members and how you work with your members. Maybe some of you will have questions later on. I would ask you from the very beginning this question that I often hear people who say, the problem is global finance. And this is what we need basically to cancel or to eradicate. What's your point of view at Finance Watch about global finance being the problem?
Well, global finance, to start with, is before anything else finance. So is finance the problem, or is it not the problem? The reality is that it depends on what you do with finance. Certainly, we at Finance Watch strongly believe that we need finance. Finance is an indispensable mean, but it is not and should not be the objective of society nor the economy. So the most fundamental principle that we have is that if we have finance serving the economy and serving society, then finance still needs to be regulated to make sure it does its job properly. But then that's the sort of finance we need, because we all need finance. We all need money to pay for our rents, for our food, to send our kids to school, whatever. So we need money. But that's serving. If finance and when finance becomes the objective, and we have the economy and society serving finance, then we have a big problem. Then we have a big problem, because if I can take a comparison, it's exactly as if the servant had replaced the master. And the master should be, at the end of the day, the people, society, okay? And then you have the economy serving the people, and then you have, even under the economy, finance serving the economy serving the people. That's, in our conception, the normal hierarchy. And when finance becomes the master and everybody works for serving finance, then we have a big problem. So in order to answer your question, is finance and global finance is just, the fact that, we live in an always more globalized world, just a reflection of that. It is essential to answer that question.
Do you think that after this huge crisis that hit Europe, the United States, I would say the world in 2007, 2008, something has basically changed to make finance not just an end but also a mean?
That's a very interesting question, because if you ask that question to different people, you get very, very different answers. And the reason why you will get very different answers is precisely, it will depend on the conception that people have of whether we have today finance as the objective or as the mean. Many people will tell you, and they have a point, that many things have been done in financial regulation. A number of technical and sometimes extremely technical measures have been taken that for many of them make sense. Like trying to reduce systemic risk with, when banks deal with one another through derivatives transactions. I mean, there's many things that have been done, increasing the level of capital of banks. I mean, those things, are going in the direction that makes sense. But the real question you're asking is, have we changed the relationship between finance serving society or the economy and society serving finance? In our view, we have not changed that at all, because the most fundamental questions have not been addressed, and we're still in a system that not only threatens society if it fails, and tomorrow, I'm not saying it's going to happen, but if a new financial crisis were to strike, then we would have the same, if not even worse, impact on society. So that hasn't changed. And if the question is the likelihood or the possibility of such a crisis happening again, just realistic, the answer is yes. I mean, things can happen again. So we haven't changed that. And we're still in a system where, the economy and society is meant to be serving finance. And that, to us, is a fundamental thing to change.
It's in a way, it's a very strong statement, because I guess most of the people would say after the crisis, like, we've learned the lesson. From my perspective, what I see, and I think it's also important to mention that maybe the solution are not yet on the table, but you had coverage in newspapers like the Financial Times quite often in the last 2 years. Many newspapers are talking about your message and what you're doing. So could we say that there is a process in which we have kind of a ideological turn, which even people that before were advocating a certain message, today they are getting closer to what you are advocating?
I think there is a growing consciousness in society that a number of topics are really important. You're right in saying that we've enjoyed a very broad media coverage. All in all, I mean, in our 2 years of existence, we've had close to 700 articles, interviews, documentaries, etc., which is very broad. Mm-hmm. And what's interesting is that it's not only us. There's a number of progressive regulators, of academics, of journalists, of researchers, of writers who are saying things that are really very, very similar to what we're saying, and obviously we're saying it as well. I think there's a growing, feeling that something needs to be done, and it's interesting to realize that. At the same time, let's be realistic. Mm-hmm. Today, the actual impact we have had on legislation is far from being sufficient, because answering your question a few minutes ago, as I said, we have not changed the situation where we still have, to make longer story short, society serving finance. So there is, there's a growing conscience of the fact that it needs to change, and the topic is now in the public debate, and that's really our purpose at Finance Watch, to feed the topic and to feed the topic and to to make the possibility of the debate happen, but much more work needs to be done.
You've covered many dossiers in the last 2 years. There are few of them I'd like briefly to mention here, maybe talk to you about this. I've seen that you have a very important focus on banks. And of course, it's a pillar of the financial system. Could you say something about this very important the Lee Canning report?
Yes. Well, banks are obviously essential when you think and talk about finance. I mean, at the heart of the financial system, you have banks. Of course, you have other actors like insurance company, like financial markets, like shadow banking, like intermediaries. There are many of them, but banks are at the heart of it. Just to give you two numbers, in Europe, in the European Union, the size of the banking system is roughly 24,000 billion euros, which is 3.5 times the size of the European economy. So you have a banking sector which is 3.5 times bigger than the European economy. So it's very difficult to say it's not important. Another number which is very important to bear in mind is that on average in the European Union, you have only 28% of banks' activity which is about lending money. If you ask people in the street, what's a bank about? Well, lending money, is it not? Yes, but if you look at European banks, only 28% of their activity is about that. So there's a very legitimate question is, what about the remaining 72%? What are they doing with that 72%? And that's why we took up the topic. You mentioned the Lee Canning report. It's about effectively separating commercial banking activities from investment banking activities. Commercial banking activities are very simply the three basic functions of banks, which is lending money, taking deposits, and making payment services. And that is the fundamental role of banks, and this is a vital role. And
that
why
we need, that companies need, that's...
Yes, we need it as in it's vital, i.e. if we don't have it, we cannot live as a social being tomorrow morning. And then there's many other functions performed by banks. Some of them are useful, some of them are less useful, some of them are toxic, but even without going into that debate of what's useful, what's not useful, they are not vital, as in you can live tomorrow morning without them. And that to us is a fundamental distinction, because society brings support to banks. And there's a public support to banks through, guaranteeing deposits and the implicit support of public authorities to banks. So that means that costs money to society, that costs money to taxpayers. And our view is that if taxpayers are going to pay for something, it should be for something that is vital for them. If you and I give a guarantee for the rent of a flat, you want to give it for your best friend or your little cousin whom you like very much, but you don't give that guarantee for someone that you've never met and you know nothing about, or even worse, someone who's working against you. Okay, it's exactly the same thing when taxpayer and society guarantees banks. If society is going to be guaranteeing banks, it should be for those banking services that society absolutely needs at all times. For
commercial banks.
Yes, for commercial banks. The rest should be separated and should live its life, but without the support of society. And this is the whole debate behind separation of banks.
It seems pretty simple, and also, if I'm not wrong, 15 years ago, this was happening. You had a kind of clear separation. So what do you think what's the problem to make this happen today?
Alors, you're right to say that, in the USA, you had a strict separation of commercial banking from so-called investment banking, so financial market activity of banks, up until 1999. So it's not so old. And as we saw in the US, you had a very, had a thriving banking market. You had commercial bank and investment banks, and they did the job. In Europe, it was different because there was never a law prohibiting them, but gradually European banks grew into doing both commercial banking and investment banking because they realized, certainly for those who grew very large very quickly, and there's quite a number of them in Europe, that they had a tremendous benefit by mixing commercial banking and investment banking. And the benefit is that thanks to the support of society, they can raise money because they need money to operate at a cheaper rate. So that's what we in our jargon called a funding subsidy, but which effectively means that, for instance, if a bank could raise money at 6% for the sake of argument without public support, they can now raise money at 4%, so 2% cheaper thanks to the support of society. And that economy of 2% per annum on hundreds of billions of euros of funding, you can count by yourself. It is a tremendous amount of money. So if and when banks fight against separation, it is precisely because a lot of their trading activities, non-vital banking activities, are funded artificially low thanks to the public support of society. This is the whole debate, and this is why they're fighting so hard against any reform of banking structures.
Yeah. And then you published a very nice cartoon, was done by Frederick Ash, one of your graphics analysts here, but
yes,
he's also working like this. I think it represents quite well the what's going on today in a way, right?
Yes, I really like that cartoon, and Frederick is, I mean, it's interesting because Frederick, who drew this, is both a bank analyst and at the same time he's got the talent to draw, and that cartoon captures and encapsulates so many of the debates. The first thing that I really like about this cartoon is that you see the too big to fail bank. There's about 15 such banks in Europe that are absolutely huge.
15?
Yes, more or less. I mean, between 12 and 15. And you're talking about banks that have the size, I mean, the total size of the bank is equivalent to the size of the GDP of their home country. If you take a Barclays Bank, if you take a Deutsche Bank, if you take a BNP Paribas, those kind of banks, their size is equivalent to the size of their home country. Okay, so...
And this is new, I guess.
This is not new, as in it's been happening over years, but it keeps on, they keep on growing. So, there's a question there. And when we say too big to fail, obviously no country can allow to fail a bank that is as large its own economy. So we have a question there. So we have that big elephant, which represents a big bank, which is exactly that. And then if you look at European banks, in total in Europe, in the EU, you have 8,000 banks, roughly. And in the Eurozone, you have more or less 6,000 banks. So you have many, many small and medium-sized banks that are very, very different animals. And, one of the questions is, what do you need to society? Do you need 10, 12, 15 super large banks that are too big to fail? And let's listen to the words. Too big to fail means if they fail, we citizens, European citizens, all have a huge problem. So we cannot allow to let them fail. So, or do we need small banks that do the job? And if a small bank fails, it's an unhappy event by definition of failure, but for society at large, it doesn't create a risk. The other thing that is very nice, I find, and I didn't draw it myself, I don't have that talent, in that little drawing is the regulator saying to the big elephant, we need to talk. And we can easily see that the regulator is almost shy in talking to the big elephant, and that the big elephant, if it wants, can just ignore him or sweep him away. And that is the reality of today's situation where, many regulators are very conscious of the problems. Many of them are, extremely competent, dedicated, thoughtful people, but very often as well, they're not given the means of doing their job. They're not powerful enough. And we can very well see on that drawing that, if the elephant doesn't want to listen or doesn't want to talk, he will not talk. So that is important.
Yeah. Well, that's probably one of the main work that you're doing here at Finance Watch. But there are other files that you are following. Recently, I like the fact that you work on what is called high frequency trading, and at the same time, you were advocating that it's important society look at the long-term investment in society. So we have here two phenomena that on which you put the focus that seems to be completely opposite, but at the same time, it reflects very well what are the priorities in our society. Maybe what's your point of view about this?
I think this is a fundamental topic. This is very, very important. So thank you for asking. Long-term funding, long-term investment is a very simple idea that says that if we want capital, money to go to people, to the economy, to society, it must have the long-term view, because the economy and society is about long-term. You don't build a company in 2 days, 2 months, and not even 2 years. You need time to build something. Any project will require time. So how do we regulate finance so that there will be incentives for money and capital to go to the economy with a cycle that the economy needs, i.e. long term? At the other end of the spectrum, you have what is called today high frequency trading, which is a technique by which assets, mainly shares, but also bonds and sometimes other financial assets, are bought and sold on financial markets with a time horizon of a millisecond, a thousandth of a second, and now technology is working to work with a time horizon of a millionth of a second. 1 divided by 1 million of a second. What's really interesting is to see that the logic behind that is that the long term would be, I'm speaking in the conditional, the sum of short-term periods. Effectively, some people, and that's the dominant thinking in financial markets, say that, well, if you want finance to go to a 30-year time horizon, it's very simple. Divide 30 years in the relevant number of milliseconds, and there's necessarily a number of milliseconds in 30 years, and reinvest it each millisecond, and you're fine. We think, and many academics think, that this is the most absurd idea and destructive idea we can build our societies on. Because, the long term is not the sum of short-term periods. This is not true. You and I, when we work, when we live, if we know that we have 2 minutes to do something, we're not going to do the same thing that if we know that we have 2 years to do something. This is not true. And in financial markets, there's nice theory. One of them is the efficient market hypothesis that basically says, don't worry, the market is always right, so you can have as short a time horizon as you want. You will be right. So, work in the short term and it will contribute to the well-being of society in the long term. This is the most fundamental, wicked idea we can build our society on, and that needs to be fought.
It's because of a problem of stability or coherence or trust. What do you think is the problem when you really look at such a hyper short time?
The problem is that if you think finance should be serving the economy, well, you need to adapt the financial cycle to the economic cycle. The economy takes time. The economy, by the way, is not liquid. You don't buy or sell an activity each day or each minute or each second. So finance has to stick to the economic reality that is behind it. If you divide the time horizon of finance in a way that is just not compatible with the economy, there's just a divorce between the two. And then you have two worlds that just don't relate to each other. So this is really the fundamental problem.
All right. Well, I see that time flies by. So we covered a few elements. Let's see a little bit what the audience is asking so far. I think you covered a little bit this one, but it might be good to get back to it. So basically, how do you define this general interest, and I would say, maybe to be a bit provocative, how come you think that Finance Watch is the organization representing this?
Good question. I like that provocation. We don't pretend to represent public interest, but we try our very best to present arguments in favor of public interest when it comes to financial regulation. So there's a difference there. Public interest, we could write books 100 pages long about it, but effectively it all comes down to an interest that is not competitive between citizens. If something is of public interest, if someone benefits from it, the other citizen does not lose. This is really at the heart of what public interest is. And public interest is not the sum of private interest. It is something else. The other thing that you can obviously see about public interest is that there's some obvious cases. It's like, we were talking elephants earlier, but it's like the elephant in the room. When you see public interest, it's there. When it's there, you can see it's there. When you take the UK example, when you have UK banks that failed in 2007, 8, 9, that were bailed out by the UK Treasury, and that the public debt of the United Kingdom goes up by 50% because of the bailout of banks that had to be nationalized effectively or bought by the states, and that the UK public are going to have to pay for it for 1 or 2 generations, that public interest is at stake. That the UK public, the normal people in the street in the United Kingdoms, lost on this. When you see that in order not to make the creditors of Dexia pay for the mistakes of the management of Dexia.
Dexia was a Belgian bank. Yeah.
Dexia was a Belgian bank that made huge mistakes and that went bankrupt. Now, the Belgian state has given a guarantee to guarantee basically the liabilities of Dexia equivalent to 15% of the Belgian GDP, 15%, 1/5, just to guarantee the past mistakes of bankers. Should the Belgian citizen have 15% of its wealth, put against, guaranteeing or paying for the mistakes of bankers? Clearly, we are saying public interest is at stake. And you have public interest that is paying for private interest mistakes.
All right. Well, I hope, Paula, this answers your question. We have here another question by Barbara. How do you experience the everyday lobbying in Brussels? Are MEPs, bureaucrats, etc., listening? What's your point of view about this?
Yes, we've encountered a situation where probably because Finance Watch was created from a call from legislators, there's a lot of willingness, certainly here in Brussels, to listen to what we are saying, to see us, to meet us. So we meet parliamentarians, civil servants, regulators, supervisors, literally on a daily basis. That's our bread and butter, and we're very often invited in hearings in the parliaments and everything. So we do get a chance to make our points. Now, meeting people and being listened to is one thing, being heard is another thing. I'm not saying that we're heard enough, and we're very conscious of the fact that the first step is to have the policymakers, to use a general expression, listen to you, and to a pretty good extent they are listening. There could be exceptions, but generally, certainly here at EU level in Brussels, it is happening. Would be different in some member states, but here in Brussels it is happening. But we're conscious also of the fact that sometimes we're not heard, or sometimes even we can be instrumentalized, like, oh, we've listened to Finance Watch, we've done our job, and we don't need to hear what they're saying. And obviously, our objective is not only to be listened to, but to be heard. So we have much, much more work to do to convince and win all the battles that we have to win.
And maybe here interesting to stress that Finance Watch is an organization with several members. I don't know how many members you have, but I guess that there is here teamwork where at the national level and here in Brussels, all these members are working together.
Absolutely. What you're saying is essential. I mean, Finance Watch has 72 members. We have two types of members. There's organizations, other NGOs, trade unions, consumer organizations, research centers, social housing organizations. That's that kind of organizations that collectively represent many millions of European citizens. And we also have what we call qualified members, i.e. private individuals that have a special qualification in finance, former finance professionals, I'm saying former, or academics, researchers, that sort of people. Collectively, and that is very important, the objective of Finance Watch is to have its members get into the debate. So it is not, the very first objective of Finance Watch is not for Finance Watch as Finance Watch to be speaking. Of course we do it, because it's part of our job. And that's sort of the conspicuous, part of our work. I mean, people see us as, okay, Finance Watch said this or appeared there, etc. But the main objective of Finance Watch is to work with its members and for its members so that, a broader section of civil society gets involved in the debate. For instance, here in Brussels, there are very often consultations on a text, on a directive, on a law that is proposed by EU institutions. And when there is a consultation, it is very important that citizens and civil society respond as massively as possible, because you need, quality responses, but you also need enough quantity of responses if you want to weigh in the debate. So obviously, when there is a consultation, Finance Watch answers. It's normal. It's our job. But as importantly, and I would say more importantly, it works with its members so that as many as possible of its members will respond as well, so that you have 20, 30, 50 responses from civil society to a consultation, as opposed to, there's been cases in the past where there was like 200 or 300 responses from the financial industry and 0 or perhaps 1 or 2 from civil society. Well, our big objective is, if you still have 300, from the financial industry, you should have 80 or 100 from civil society, and then you're starting to count and to weigh in the balance.
And right now, if I'm not wrong, on your website, you have a call for this consultation by the European Commission about bank reform.
Yes, absolutely. There's consultation. The deadline is next Thursday, so it's very close now. In 2 days' time. On reforming banking structures in the UK, in the EU, as the UK did or is doing at the moment, and there's also initiative in France and Germany, but they're very marginal and weak, to say the least. But anyway, there is a consultation at EU level, and we're answering, and we've been working with our members so that they will answer as well.
And anyone wishing to send something can visit the website, and I think all the information is there to participate. So still 2 days to go, and as Thierry just said, it definitely plays a role in the lobbying.
It's very important, even for individual citizens to answer, because the more answers, the more responses, the more EU institutions see that society is concerned with those topics. So on our website, we try to provide elements of answers. By definition, everybody is free to say what she or he wants, but there's elements of answers to help answer the consultation.
You just mentioned the difference between, I would say, access to the European institution and influence, something which is very different. Here we have Jan from the UK asking something, maybe more about the content. How do you challenge the technical expertise, the black box, as Jan says, that industry has and uses to dominate expert groups? I mean, are you yourself invited to these expert groups and...
Yes, more and more so. One of the characteristics of Finance Watch is that we have a team of 13 people, and many of us come from the financial industry. We've done that work for, I would say, the minimum requirement to be analyst for Finance Watch is to have worked for 10 years in the financial industry. Some of us, including myself, are closer to 20 than 10. And by definition, if you've done a job for 10 or 20 years, well, you're starting to know how it works. So yes, there is a black box. Yes, there is a lot of jargon used by banks and financial industry to hide private interest, and sometimes, apparently, good, explanations just hide, very petty private interests. And so we need to be able to debunk arguments. We need to be able to understand how the technicality works, and that's precisely our job. I would say that one of the characteristics of Finance Watch is that precisely as we come from that world, of course we're a small team, sorry, but we have no complex of inferiority in terms of expertise. This is not being pretentious, just a reflection of the fact that we've done the job as the other side is doing it.
And as you say, then of course in terms of quantity and stuff, then you need to work with other members and citizens in order to put the pressure.
Absolutely, and another dimension is that on all the positions we work on, there is that systematic collaboration between the members of Finance Watch and the team of Finance Watch. So the team is composed, as I was just saying, of former finance professionals. The members have a very, very broad, range of knowledge, of expertise, and they bring that to us on each topic. And obviously, on some topics, it will be a category of member, working on a topic, and then another category. But if you take, for instance, the many academics that we have as qualified members, we do a tremendous work with them to come up with the answers, and many organizations do the same thing as well.
All right. Well, that's a thank you from Jan. So I think the answer was interesting for him. I
Thank
see
you,
that the time is flying by. Maybe a final question. But first, I would say, if you're interested, Finance Watch just published the annual report. It's available on your website.
You can download it.
Yes, and I think there is a lot about all the files and dossiers that you've been working on in the last year. Maybe a final question, just really as a conclusion. We know that here in Brussels, the European Parliament election are coming up. What is going to do Finance Watch, I would say, in the next year after the holidays? What do you have in mind? On what would you like to put the stress, I would say?
Well, what we want to do is that obviously we're going to have a new parliament, European Parliament. We're going to have a new commission, and that means that we're going to have a new legislative agenda for the next 5 years. So what is absolutely essential is that we try, at least, that's our work as an NGO, that's our mission as an NGO, to influence the agenda for the next parliament. Mm-hmm. And obviously influences in a way that will motivate, politicians to take up fundamental issues when it comes to financial regulation and to finance-serving society. And those issues are basically what we discussed today. How do we come up with a system where money goes to productive use? Mm. How do we come up with a system where money serves, I'm going to be incredibly boring, but end users, i.e. people who have money to invest or people who need money to work? At the end of the day, finance is about, people who have money who are willing to invest it and people who need money who are willing to raise it or borrow it. Okay, why do we have a system that does less and less of that today? How do we build a system where banks, A, do their job, and B, do not threaten society if they fail, which is such a fundamental issue? So all those questions we're going to be pushing and asking the next commission and the next parliament to put on their agenda. And in order to do that, we need public support. So we'll be launching a campaign after the summer to promote those ideas. And obviously, we'll go to our friends. We have friends that are registered, that can register on our website. And we'll be counting on our friends to relay the message and to work with us on that. But more on that later. We will come back to them on that.
Great. So after the summer holidays, probably.
Yes.
Get ready. You will get more information from Finance Watch. Thanks a lot, Thierry, for being with us today.
My pleasure.
Yes, and
let's do it again.
Yeah, and thanks everybody for attending this lunch webinar. Stay tuned, we'll have more, and of course this will be recorded and online very soon. Bye bye, thank you very much.
Bye bye now.